Welcome back to Investing Talk Podcast.
Good to be back.
Today, we are focusing all our energy on one company, really specialized but, influential biotech, Sarepta Therapeutics. And our mission today is pretty clear. We're digging into the sources, the fundamentals, the technicals, the catalysts, to try and answer the question. Based on what we know right now, is this actually a good time to buy Sarepta stock? Now, before we really dive in, just a quick reminder, we always appreciate if you subscribe, like the show, leave a comment if you're finding this valuable.
Yeah, definitely helps us out.
And hey, if there's a specific company you want us to analyze next, please drop into the comments below. Let us know.
Absolutely. So Sarepta Therapeutics, it really presents one of the most, I think, compelling risk-reward profiles in the whole biopharma space right now. They are pretty much the undisputed market leader in rare neuromuscular disease treatments.
Yeah.
Especially Duchenne muscular dystrophy, or DMD. And this discussion, it isn't just about, reading off metrics. It's about figuring out why this very specialized focus creates such intense momentum, and also why the valuation can swing so much. So maybe we should start with the financial bedrock and, their competitive edge.
Okay, yeah, let's unpack that foundation. So looking at the financials, the growth trajectory is just sprinting, basically. The company reported $2.48 billion in trailing 12 months revenue. That TTM figure, it really shows incredibly rapid expansion, puts them way ahead of a lot of their biotech peers, actually.
Yeah, and that expansion, it's really a testament to how successful their specialized portfolio has been. But here's where it gets interesting. Despite that massive revenue, the company is, believe it or not, still reporting a net loss. It was about $57.96 million over that same TTM period, which translates to negative earnings per share, or EPS, of minus 60 cents. Negative EPS basically means they're still burning cash per share. They're prioritizing R&D spending over hitting profitability right away.
Okay, hold on, though. Billions in revenue, but still posting losses. On the surface, that sounds like a pretty serious red flag for an investor, doesn't it? Why isn't that setting off huge alarm bells?
Yeah, that's a really important question. And this is where you kind of have to connect the dots, right? The key insight here, I think, is that investors aren't necessarily buying the current earnings. What they're buying is the option on this entire highly specialized market segment, specifically the future of DMD gene therapy.
Okay.
So analysts are actually projecting profitability pretty soon. And you see that reflected in the forward price-to-earnings ratio, which is like 12.97.
Pretty low for biotech.
Exactly. That low forward PE only makes sense if the market firmly believes this company has basically already won the race, or is very likely to win the race, for that huge future profit stream. So the losses right now, they're seen more as, necessary investment, capital expenditure to protect this incredibly valuable pipeline.
Okay, that makes more sense.
Yeah.
And the company's overall stability allows for that continued investment, right? This source has mentioned low leverage, strong cash position. Pretty typical for solid biotech players. Their market cap right now is $2.16 billion. So they clearly have the flexibility they need for R&D.
Exactly. But probably the biggest structural reason the market tolerates those losses is their competitive advantage, what people call the moat. Sarepta is described pretty consistently as the undisputed leader in precision genetic medicine for these rare diseases, like DMD.
Yeah, and it's important to remember when we talk about DMD, this is a catastrophic, truly life-altering diagnosis.
Absolutely devastating.
So when a company is first to market with genuine therapeutic hope, that creates an unparalleled kind of moat, doesn't it?
It really does. And that societal value, it feeds directly into market dominance. Their moat isn't just about money, right? It's built on strong brand recognition, massive regulatory hurdles for anyone trying to follow them, and these cutting-edge innovation platforms they have in both RNA-targeted therapies and gene editing. They aren't just selling a drug. They kind of own the whole ecosystem for DMD treatment right now.
So, okay, strong financials, check. Dominant growth, check. Unrivaled moat, check. But, money managers don't always wait for fundamentals to fully mature.
Yeah.
Let's maybe shift gears and look at the technicals. Is the market already pricing this future growth in? What are the charts telling us?
Well, the charts are practically shouting recovery. The stock rebounded, what was it, a spectacular 23% in just the past month.
Wow.
That's a really clear, decisive, bullish shift. Seems fueled by, renewed optimism and definitely that positive regulatory news we saw recently. The price action suggests traders are really piling back in.
And the underlying technical health looks pretty solid too, right? For the short to midterm, anyway, looking at the simple moving averages, the SMAs,
Yeah.
the signals confirm a midterm uptrend. You've got the 5-day SMA above the 20-day, which is above the 60-day. Classic bullish setup.
That's the classic pattern, yeah. Confirms strong momentum. And that momentum, it's backed up by key indicators like the MCD, the moving average converter divergence, and the awesome oscillator. They're all flashing bullish signals. However, and this is where we need to add a little note of caution, especially for short-term traders. The stochastic RSI is reading quite high. It's at 83.7.
Okay, so for listeners maybe not deep into technicals, stochastic RSI, that's like a gauge of how fast and far the price moved compared to its recent range.
Exactly.
And above 80 usually signals overbought. So does that mean people should wait for a pullback before jumping in?
Not necessarily, actually. While, yes, that high reading normally suggests overbought conditions,
Yeah.
in really strong momentum phases like this one seems to be, it often signals continuation, meaning the stock might just be pushing right through those typical resistance levels. The momentum itself is the primary driver right now. And if you look at the potential upside, that technical strength becomes even more compelling, I think.
Compelling might be an understatement. Analysts have set a consensus target price of $40.61.
Yeah.
Compared to the current price, what, around $22.11?
Yeah.
Over 83% potential gain. That's massive. Even the low-end targets are showing like 52% upside.
Huge potential.
Wait, hang on. 83% potential upside, but the official consensus rating from analysts is still technically hold. That smells like, I don't know, a major lack of confidence from the analysts themselves. What are they so scared of that keeps that rating down?
Right. That contradiction is really the central tension with the stock right now, isn't it? The analysts, they know the potential is massive. You see it in the price targets. But that hold consensus, it reflects the high inherent regulatory risk we mentioned earlier.
Okay.
Combined with the fact that they're probably waiting for concrete events before they upgrade that rating officially. They need confirmation that this recent momentum is going to stick, you know? It shows a kind of conservative approach despite those really aggressive price targets.
And that takes us perfectly into the catalysts, then. These near-term events that will either justify those targets or, well, potentially send the stock back down.
Yeah.
And Sarepta seems to have a remarkable number of known events coming up.
They really do. First, you have to look back just a bit at that critical regulatory boost. The FDA reversal, allowing the Duchenne treatment and letting clinical trials resume, that was a massive confidence injection.
Huge.
It signaled that the main regulatory hurdles, at least for now, seem to be in the rearview mirror.
But the immediate scientific catalyst, that's coming up in October 2025, right? New clinical data at the World Muscle Society Congress.
Exactly. And for a specialized biotech like Sarepta, clinical data is absolutely the lifeblood evaluation. If those results are positive, I mean, that presentation alone could be a significant and pretty rapid valuation driver.
Okay, and then following that, you've got the main financial catalyst, the next big checkpoint, the earnings report due November 5th, 2025.
Yeah, November 5th. That's kind of crunch time, right? This is where we get the quantitative confirmation. If they give positive guidance or if the results really exceed expectations, especially if they show improving margins, maybe a quicker path to profitability that could easily push the stock rapidly towards those $40 analyst targets.
And then beyond the immediate reports, the longer-term potential is all tied up in the pipeline, isn't it? Specifically that next-gen gene therapy, SRP 1003.
Yeah, absolutely. Speculation around the regulatory approval timeline for SRP 1003, it's always kind of buzzing in the background. Gene therapy is really the holy grail in this field. So any concrete news, any hint of a green light for that could have a rapid, massive impact on the stock price. This is where that long-term vision really intersects with short-term trading opportunities.
What about all the speculative buzz? You often hear rumors about potential acquisitions with companies like this. Are the rumors that bigger pharma companies might be looking to buy Sarepta? Is there anything concrete in the current sources about that?
Well, as of the current news cycle reflected in the sources, we haven't seen anything truly concrete about a major acquisition or even a big strategic partnership. Though, the speculation naturally continues around a market leader like Sarepta.
Sure.
Larger pharmaceutical companies are desperately looking to build out their gene therapy and RNAi portfolios, and Sarepta is just such a prime target, owning its niche like it does. So the rumors definitely help keep a sort of premium baked into the stock price.
Okay. We've painted a pretty positive picture so far, but we absolutely have to provide balance.
Yeah.
Investing in biotech is inherently high risk. What are the key risk factors we really need to keep top of mind here?
Yeah, definitely. The primary and probably most structural risk factor is company-specific.
Yeah.
It's regulatory scrutiny. Sarepta has a history, of clinical and regulatory bumps in the road. Trial pauses, safety questions. The sources specifically note that further regulatory hurdles, including potential safety setbacks, remain an ongoing possibility, and that could easily derail the current momentum.
Right. The FDA giveth and the FDA taketh away, especially in rare diseases.
Exactly. They can be a partner, but they're always a strict gatekeeper.
Yeah.
And then, despite the improving margins and that low forward PE, we have to reiterate the profitability point. The firm is not yet consistently profitable. That adds structural risk.
They still have to execute perfectly on those projections.
Absolutely. They need to prove they can scale revenue while keeping R&D costs under control enough to actually flip from net loss to consistent profit. However, there is one mitigating factor for general market risk. The stock's beta is quite low, around 0.50,
Okay.
which suggests it's theoretically less volatile than the overall market. But investors have to remember they're ultimately betting on scientific and regulatory outcomes here. And that's pretty much the definition of high risk in investing.
So, okay, synthesizing all this then, the accelerating revenue, that dominant competitive moat, the bullish technicals, and those multiple near-term catalysts. What's the final investment thesis we can sort of draw out?
Yeah, putting it all together, the synthesis suggests, I think, an overall bullish rating, maybe like an 8.5 out of 10.
Pretty strong.
Yeah, the risk-reward profile looks highly compelling right now. Sarepta seems clearly set for a potential breakout, driven by really concrete events like the upcoming November earnings and that World Muscle Society presentation. And the technical momentum, it just confirms the shift in sentiment that those catalysts seem to have already created.
And what does this mean for someone's investment horizon? Is this more of a trader's play, or is it a long-term growth story? Or both?
I think it's actually both right now. First, it looks highly attractive for tactical traders who are aiming for momentum, trying to capitalize on the clinical results and the November earnings news within the next few months.
Makes sense.
But second, for growth investors, it still presents a really solid long-term opportunity because of its clear market leadership in gene therapy and just the significant pipeline expansion potential they have. It's a specialized leader in a field that itself has exponential growth potential.
Okay, so it really sounds like the evidence suggests Sarepta Therapeutics is genuinely in a strong momentum phase right now, driven by these concrete near-term events, setting the stage for potentially major upside.
It certainly looks that way, and, maybe as a final provocative thought for you to consider, since this company's valuation is so completely tied to breakthroughs in treating rare genetic diseases, just think about how quickly these gene therapy advances could fundamentally change the entire valuation structure for specialized leaders like Sarepta. I mean, if their pipeline candidates like SRP-1003 actually redefine treatment protocols, what does that mean for future compounding returns in a medical space that, let's face it, is still fundamentally in its infancy?
That is a fascinating question to mull over as you do your own research. Great discussion.
Yeah, likewise.
Thanks for joining us for this look into Sarepta Therapeutics.
Thank you.
We'll catch you next time on Investing Talk Podcast.